But we've also got Mr. Srikanth Velamakanni, co-founder and group CEO of Fractal Analytics. He was here to speak to us. Thank you, sir, for joining in. Tell us about the EBIT margin in the first quarter. EBIT margin dropped nearly 490 basis points on a quarter-on-quarter basis. PAT as well was seen falling about 38% despite the revenue growth that you've clocked. What drove the sequential margin compression, and do you expect it to persist going ahead?
See, first of all, our margins are usually the highest in the fourth quarter, the lowest in the first quarter, and they gradually go up to the fourth quarter. This has happened historically every single year. So the best way to look at margins is to look at year over year. And our adjusted EBITDA has gone up from 15 to 17%, 2-point improvement. Our gross margins are up 29 basis points. So every single margin number has actually improved over the last year. So on a year-over-year basis. So that's the best way to look at it. That's while sequentially, yes, they are down. That is sort of expected because usually we hire a lot in the first quarter. We have salary increases, etc. And over the year, we bring our margins back up to the usual level. So this is really a year-over-year trend. And best is to look at the year-over-year numbers in terms of profitability. And every single profitability number has improved year over year.
All right. Both Americas and Europe grew over 24% year on year. What is driving this growth, and is it durable?
Number one, Europe grew by 25%, US grew by 24%. And we expect that given the explosion in demand for AI, we expect that this industry has phenomenal growth prospects. Yes, our overall growth has been 20%, and that's because some of the pressures that we have seen in TMT. But if you see sectorally or geographically, there's opportunities everywhere. Because AI can fundamentally address several needs that are being addressed typically by IT services or business process outsourcing or business process management or management consulting, all of these industries are now being disrupted with AI. And therefore, AI's total addressable market is expanding in such a way that it's creating this opportunity for us to grow in every industry across every geography at a pretty significant clip. Overall growth rate for us has been 20%, but we expect that number is more because of our execution, not because of our demand. We can grow faster, and we should be going faster as we get our execution into play.
Also tell us about excluding the TMT business, which grew at 35%. What exactly is causing this drag, and when do you expect stabilization or recovery over here?
First of all, I will take responsibility that our TMT execution has been less than stellar. And instead of blaming the sector or blaming clients, I think we should take responsibility that we haven't executed well. TMT as a sector is still growing. We should be growing there, though we are not. So it is our execution, and we are making some changes in order to improve our overall execution in TMT. Having said that, let's also look at what's happening within TMT. TMT industry has significantly increased its AI capex. So because they're putting more, buying more chips, building more data centers, building capacity for AI explosion, because of which their AI investments are going up quite substantially from a capex standpoint. But from an OPEX standpoint, it's putting pressure because they have eventually, a pot of money, and they're spending a lot more of that on AI capex. So there is pressure in reducing the AI OPEX. And part of that is playing out in the way our opportunities have, some of them went away, or because of which our overall revenues have gone down. Eventually, we think that the massive opportunity, TMT is one of the largest industries for AI, and we should be able to recover that growth. But for now, we've had a bad growth. Now, this growth is bottoming out. So we expect that the next quarter, we would have a sequential growth in TMT.
What is Cogentic's current revenue contribution and its expected trajectory this year?
So Cogentic is our agentic AI platform. And think of it this way, that when companies are beginning to transform their business, transform their workflows with AI, they need to build a knowledge and an ontological layer on top of their data, and then take each business process and reimagine that. So what Cogentic does as a platform is to help companies think of building those agents that work with enterprise tools that access the enterprise data. And they solve complex business problems. And the platform enables that. On top of that, we are building specified products to tackle each industry opportunity. For example, Cogentic underwriting helps you solve underwriting problems using AI. Cogentic for e-commerce helps you grow e-commerce revenue. We are seeing growth in each of these as we go forward. Now, Cogentic pipeline for the year, we have disclosed today, it's about 4 million. And we expect that Cogentic as a fraction of the overall revenue will keep going up. Overall, if you see the license revenue portion of our business is 3%, and we expect that number to keep inching up and go up to almost as high as 20% over the next 3 years.
All right, Mr. Srikanth, you're investing over 6% of revenue in AI R&D, and you're also highlighting a data sovereignty demand. So where do you see the biggest AI-led growth opportunity for the rest of FY27?
The biggest opportunity for AI is to help companies reimagine their workforce, as well as their processes with AI. That is a big demand. Now, one of the considerations for companies adopting AI is also to make sure that the AI that they use is trustable, meaning that it will not be stopped by anybody at any point of time. And secondly, that it is giving me the desired outcome. I wanted something, how aligned is my AI to that? Which means that we have to solve some fundamental problems, including providing model optionality in the way the clients solve their problems. So that's one. Secondly, we have to build that knowledge layer on top of the data. So this is where we're seeing the big opportunity with AI. As AI becomes more trusted, it'll get more adopted. As it gets more adopted, we'll see more value and more value unlock, which again leads to more demand expansion. That's really the virtuous cycle of AI expansion.
All right. How are expanding deal sizes reflecting in the order pipeline and large deal wins? And what is the outlook for sequential margin recovery and full year FY27 growth?
Clearly seeing more RFPs, more deals with larger expectations, greater ambition, and therefore greater deal size as well. They are already reflecting in our pipeline. But we expect that as Fractal becomes larger, becomes more visible, continues to improve its track record, it expands the overall pipeline that's available to us. And we are clearly seeing some signs of that. We just are announcing one of the largest deals that we've ever struck, working with a healthcare payer in helping them reimagine their AI foundations in order to grow their business faster. So that is something that we are beginning to see across the board, that the deal sizes are going up, and we're getting opportunities to play in a much larger space.
All right. Thank you, Mr. Srikanth, for all of that. And thank you for joining us today on ET Now.